I'm glad to introduce Mr. Anas Al-Hamous that's going to talk about tax in the UK, personal taxes.
The personal taxes is a very a broad topic, and we'll be talking about a few things under personal taxes, this does not mean that we'll be talking about everything in personal taxes. So we'll talk about the first thing that comes to your mind when you talk about personal taxes is whether you need to submit a self-assessment or not, a self-assessment or a tax return at the end of the tax year or not. The tax year in the UK runs from the 6th of April in one year to the 5th of April in the next year. And you have to file a tax return by the 31st of January of next year, after the year end. And you have to declare that there are certain conditions and certain rules where you need to submit a self-assessment. Some of these are basically a notification from HMRC that asks you to submit a self-assessment. Other conditions might be if you are a higher rate taxpayer, or if you are earning above 100,000 in the UK, you need to submit a self-assessment. Other things that you might have to submit as a self-assessment if you are earning above 50k a year. Okay, this also falls under the higher rate option. But if you are earning above 50k, this means that you might be required to pay or to refund the child benefit, that if you are receiving a child benefit. So if you also receive pension, okay, you might have to file a tax return, self-assessment tax return. If you also need to claim any professional fees, or if you need to include any extra expenses that you have received through a PAYE code that you want to claim for the expenses to reduce your taxes, you might be entitled, or you might have to submit a self-assessment tax return at the end of the tax year. Now, if you do not receive a notice from HMRC, then you have to register yourself in order to submit a tax return. And you can do this by filling an online form from HMRC website, asking them to issue a unique tax reference for yourself, and then you will be able to submit a tax return. Now you can submit a tax return either yourself through your online gateway, or you can do it by authorizing an agent, or authorizing an accountant, or authorizing a business advisor, whoever you want. Even you can authorize a friend to do your self-assessment. And you can do this by filling a form, online form from HMRC website. This online form can be sent to HMRC. It's called the 64-8 form, authorization form, and then HMRC will allow the person that you have authorized to act on your behalf and submit your tax returns and discuss any information that any income information or any private information that you have with HMRC regarding your taxes. Now, also, if you have any investment income up to £10,000, you have to declare it through a self-assessment. Now, you can also be required to submit a self-assessment if you earn income from property. So if you own a property and you have rental income, you might have to submit a self-assessment if your income is above £1,000 a year. So you have to submit a self-assessment tax return declaring all your rental income less your expenses, obviously, your the management fees, maintenance, if you have any mortgage expenses. But nowadays they've taken out the interest on mortgage. That it's not anymore an allowable expense. So yes, so you'll pay a tax. You'll pay a tax on the net income from property. Also, if you are receiving dividend income from a company that you are a shareholder in, you also need to submit a self-assessment if your dividends exceed £2,000 a year, and you need to pay tax on it. Basically, the tax rates on dividends is different from the tax rates on the person. It's the rates are different. So, and if you have any other sources of income, so basically if you have any other business on the side of your normal day-to-day job, employment income, if you have any other income on the side, such as any business on the side that you have extra income from, if you are earning above £1,000 a year from that income, you will have to declare it on a self-assessment tax return. So this is just who needs to or who's required by law to submit a self-assessment. There might be other things that you are required to submit a self-assessment, such as capital gain tax if you exceed the nil threshold, or if you exceed the threshold of any reliefs on capital gains. You need to submit. You need to declare your gains, your gains on the self-assessment. Also, if you dispose of an asset, so if you have a car and you bought a car and let's say you sold it for a small profit, if that profit accumulates in a year to be over £1,000, then you have to declare that profit on your self-assessment. Now, the self-assessment, when you put your income, you will also have a section where it will ask you for your expenses. So by law, you have to keep all documents of your expenses, and you have to keep a safe record of your expenses for 6 years. This is by law. And you can add them to your expenses on your self-assessment, and then you will be taxed on the net profit. Now, the basic rate taxpayer is 20% on anything above 12,500, and then it goes 40% on anything above 50, and then it goes to the additional rate of 45% on anything above 150. So you will lose your personal allowance if your annual income, adjusted net income. If your adjusted net income, what I mean by adjusted net income is if your income less your expenses is more than 125,000, you will lose your personal allowance. Okay, so you will not have any personal allowance, and then you will be taxed 20%, 40%, 45% with no personal allowances. Okay. Now, if you think, or if you believe, or if someone advised you that there's no need for you to submit a self-assessment tax return, then you can either send an application to HMRC, or you can either phone HMRC and ask them to withdraw the notice or withdraw the request for you to submit a self-assessment. And this is basically based on the information that you give HMRC and they will ask you for the reason. Why do you think you should not submit a self-assessment? And you need to give a reasonable excuse of why you should not submit a self-assessment. And in the same thing, you can do a voluntary registration for self-assessment, whether you think you want to claim any professional expenses on your from your employment income. So if you're, let's say, if you're a doctor working in a hospital in NHS, or if you work in somewhere and you think you have to claim, or you think the NHS are not taking into account your professional fees, then you can ask to register for self-assessment, and you can add your professional fees in the self-assessment, and then any extra tax that you have paid might be eligible for a refund on these taxes. Now, you can also, if you, let's say, if you, for instance, in one of the tax years, you have, let's say, missed out of claiming any professional fees, or if you have mistakenly included any income that you have not received, or if you have been overtaxed, you can claim overpayment relief, and you can speak to HMRC and tell them that you want to claim overpayment relief. And for any extra tax that you have paid, you can ask for a refund for that tax. Now, you can go back only 4 years. You can go back 4 years, and you can claim only any extra tax that you have paid for the past 4 years. And you have to prove that the reason for the overpayment relief, what's the reason for the overpayment relief. Now the overpayment relief is only if you have not been able to amend your self-assessment tax return. So if you, for instance, have submitted your self-assessment tax return in one tax year, in a tax year, and then within the period of amendment, which is 12 months after the deadline of the payment and the submission. So it is 12 months after the 31st of January of the next year of after the year end of the self-assessment. So if, for instance, from 6th of April to 5th of April 2020, the deadline is the 31st of January 2021. You can amend and resubmit your tax return 12 months after the 31st of January 2021. So you have until the 31st of January 2022 to amend and submit your tax return with the correct figures. If you still think after this deadline, if you think that you have not sent the correct figures and you still need to send them again, and then you can claim an overpayment relief, and you need to send a letter to HMRC saying that you think you're eligible for overpayment relief, and these are the reasons that I think I am eligible. And you can only claim 4 years, so you can go back only 4 years since you submitted your final tax return. Sometimes HMRC might not accept your overpayment relief claim. So HMRC is not obliged to accept your overpayment relief if they think so. Now, like I said before, one of the reasons that you might be required to submit a self-assessment is if you were in receipt of a child benefit. So basically, in the UK, everyone is entitled for child benefit. Everyone who is a resident in the UK is entitled to receive a child benefit. It is a kind of benefit that the government pays to support the care of children in the UK. Now, if you receive a child benefit and if one of the partners' income is over 50,000, okay, this you will have to submit a self-assessment declaring your income and declaring the amount of child benefit that you receive, and a calculation will be made to calculate how the percentage of extra tax charge, which is basically a refund of, well, the amount that you have to repay HMRC, not HMRC, basically you will pay HMRC, but it is a separate department. So child benefit is a separate department from HMRC. You will have to pay back the money that you took from the child benefit department because your income or your partner's income is over 50,000 a year, a tax year. Now, some special circumstances, even if you are living with a child, okay, that his parents or one of his parents are well, high rate taxpayers, okay, and even though if the parents do not live with you but the child lives with you, you will have to submit a self-assessment and declare that child income tax charge on your child benefit. Okay, so this is not many people know this, but let's say, for instance, someone who works all the time, works away from home, and he gives a neighbor or a relative to take care of his child, and the person who works away from home, his income is very high. The person who's taking care of the child has also to submit a self-assessment and has also to be tested for the child benefit income tax charge. Okay, now how is the repayment of the extra income tax charges calculated? Is basically your adjusted net income minus the £50,000 divided by 100. This percentage, you time this percentage by your total child benefit payments that you received in 1 year, in one tax year. So for instance, if your let's say if your adjusted net income was let's say 59,000, and you divide 50,000 minus 50,000, that's 9,000 divided by 100, that's 90%. Okay, and let's say if you were receiving £2,000 of child benefit or £1,800 of child benefit, you time that 90% times whatever you have received, and you have to return back that amount to the child benefit department. Adjusted net income means income less any expenses that you think are eligible to claim, any tax deductible expenses that you can claim on your self-assessment. So like I said before, any professional fees if you are working in the medical sector, or if you're working with an NHS, or if you're working with any sector that allows you to claim any professional fees. So pharmacists, doctors, also any travel expenses, any meals. We'll come later to this. We'll talk about what are the allowable expenses that you can claim on your self-assessment and who are they for. Okay. So also you have to also declare on your self-assessment if you were receiving any type of student loan, and whether you have to refund or start doing a repayment of your student loan under your self-assessment. So basically there are 3 types of student loans, and maybe 4 will come in, another one will come in the future for PhD students, or it's already introduced. And so the type 1 student loan, type 2 student loan, and the postgraduate student loans, that covers the master and covers the PhD. So the type 1 student loan is there are thresholds for each type. So if you are earning above a certain amount, you will start making repayments under student loan. So if you in type 1, if you are earning above £1,615 per month, that's for the tax year 2021, which if you are earning above 372 per week or 1,615 per month, you will have to pay 9% on anything on excess of that amount. And if you are earning in type 2, the threshold is £2,214 a month or £511 per week. You will also pay 9% on any excess of that amount. And PGL, postgraduate loan repayments, is 6% on anything excess of £1,750 per month or £404 per week.
Thank you for listening, and we hope to see you in the next session. Don't hesitate to follow us on our social media platforms as seen on this screen. For more updates and information on the Egyptians Together Union, please visit our official website on www.egyptianstogether.com. Also, for any questions or queries, please contact us via email on egyptianstogetheruk@gmail.com. Also, for more videos, please subscribe to our YouTube channel called Egyptians Together. Thank you for listening, and we hope to see you in the next session.